Good afternoon, folks. This is Russ Harrison, Director of Government Relations for IEEE-USA. Today in Washington, D.C. itself, I am IEEE-USA's designated essential employee today in our IEEE-USA offices, basically by myself, making sure that the building doesn't burn down. So I'm in Washington with virtually no one else, which is interesting. Last week, we talked about the CARES Act, which was the big $2.5 trillion economic bailout plan that Congress passed that became law on the 27th. After that presentation, we received a number of calls regarding the small business loan provisions of the bill. And so rather than answer the same question 100 times, we wanted to focus specifically on those provisions of the bill today to talk through what relief is there, how to get access to it, and who can get access to it. And it turns out this is awfully timely. In just the last 24 hours, a number of things have happened to change the application process, and even in one case, change the rules slightly for getting access to money. So this allows us to give you an exactly up-to-date look at what these loan programs will do. And with that, start out with a quick visualization of the CARES Act itself. This was produced by the Committee for a Responsible Federal Budget, an organization which is not particularly fond of the CARES Act because it is a tremendous amount of money, all of which is being borrowed. But it gives us, I think, a great visual representation of what the bill does and where the money's going. As you can see there on the left, the programs that the CARES Act either creates or expands. The biggest section is the loan section, about half of which, a little more than half of which, is going to small businesses. And that's what we're going to talk about. Important to note that there are tax breaks and other grants that we're not going to get into because for time constraints, but there are other programs in here that IEEE members could take advantage of, particularly the tax break provisions. But let's go right into the pieces that we want to talk about today. Next slide, please. There we go. Three particular programs that we want to talk about. The Payroll Protection Program, PPP program, the EIDL program, which is Economic Injury and Disaster Loan Program, and then the piece of the SBA Loan Subsidy Program. Now, of the three, the PPP program is entirely new. These are for small businesses. We'll talk a little more about that in a minute. Up to $10 million or 2.5 times average monthly payroll costs, I should say. Important to note that individuals making more than $100,000 don't count. That will come up again later on. Low interest rate, no fees, repayable over 10 years, and this is the big thing. The Payroll Protection Program loans are not really loans. Most of them, not all of the money that's borrowed, but most of the money will be forgiven. So we'll get to that in a second, but it's a new program. EIDL is an existing program. It's a small business loan program that's designed for companies that have been hit by tornadoes or floods or whatever natural disaster happens. The CARES Act essentially declares everybody impacted by a disaster, being the pandemic. And so it expands a number of existing programs, allows grants up to $2 million under an expedited application process. Again, you don't really have to prove you suffered harm because everybody suffered harm. And then there's a $10,000 grant that's tucked in there that's pretty good, and we'll talk about that in a minute. 3.75% interest rate, no fees. The interest rate for nonprofits is a little bit less, and you have 30 years to pay it off, which is kind of nice. Loan subsidy program isn't new. It is a new rule for existing small business loans, essentially exempting small business loans from principal, interest, and fees for 6 months. That's all current SBA loans, any new SBA loans that are issued in the next 6 months, except for the PPP and the EIDL loans, which have their own forgiveness programs, so they don't need this one. So those are our three programs. Let's get into them with the next slide. Thank you. First of all, who qualifies for the Paycheck Protection and the EIDL loans? Most importantly, these are businesses with less than 500 employees. There are exceptions allowed. Essentially, the law allows the administration to say this type of industry, for this type of industry, small businesses are more than 500. think of like car manufacturer or something like that. So exemptions can be granted, but they're granted for an industry, not for individual companies. Don't quite know how that's going to work. But basically, if you have 500 or less employees, you're good. It also applies to independent contractors and sole proprietorships. Back to that in a second. Veterans organizations, nonprofits, but only 501c3 organizations. There's a couple different flavors of nonprofits in the tax code. 501c3s are the most common, but it will exclude some other types of nonprofits, some of which, particularly arts groups, can get aid in other pieces of the CARES Act. And also tribal businesses are covered. Now, for IEEE-USA's perspective, can we get the next slide? The most important of these is the independent contractors and sole proprietorships. In many government programs designed to help companies, independent contractors are left out. They're harder to deal with, they're harder to monitor. Sometimes the government just doesn't know what to do with them, so they're oftentimes excluded. In the CARES Act, there are specific rules for allowing independent contractors, sole proprietorships, people who are the employee for their company, to get at least some of the aid, in many cases all of the aid. So if you are a consultant, you can still apply for and get relief in these programs. So keep going, that's fine, thank you. Talk about the PPP loans in particular. As I said, 10 million or 2.5 times your average monthly payroll, 2019, January 2020. That piece of the code tells us what these loans are designed to do. 2.5 times your average monthly payroll is 2 months of payroll plus some extras. And that is what these loans are designed to be used for. The loans are not designed to allow you to continue to operate as a business necessarily, to expand your business, to do research. It's just designed as a life raft, to keep your head above water for the next 2 months, when hopefully things will be getting back to normal. So the loans can be used for things that allow your company to exist, not operate, just exist. So for example, payroll costs. That is in fact the most important justification, reason, rationale for this program at all. 10 million Americans, a little more than 10 million Americans have applied for unemployment in the last 2 weeks. There's been only a couple months since 1967 where 1 million people have applied for unemployment, and 10 million in the last 2 weeks. As we mentioned last week, the United States has gone from arguably the strongest economy this country has ever experienced into much, much worse than that, possibly a recession, certainly recession level unemployment already. What this program is designed to do is put as many people back to work for 2 months, just 2 months, as we possibly can, expecting that the pandemic will be receding by the end of May and people will get back to normal. And so it can be used for payroll, rent, mortgage interest, lease payments. Note, it's just for mortgage interest. It's not for the mortgage principal. Again, we're just keeping your head above water for a little while. Utilities and interest on debt that was incurred before February 15th. So if you went out and got a new loan for your business in the last couple of weeks, you're on your own. But if you had existing debt that you need to pay off, this will pay the interest, not the principal, just the interest for the next couple months. There's no payment required on these loans for 6 months, which doesn't matter because you probably aren't going to pay it back anyway because these loans will be forgiven. More on that in a second. Let's flip to the next slide. The application process is through your bank. The CARES Act authorizes any bank that is currently authorized to offer small business loans to also offer these loans. And banks that cannot offer small business loans can petition to be allowed to offer these loans. Congress was very clear, and the administration is entirely in line, that the purpose of these loans is to get money in people's hands really fast. And so the process for applying should be fairly easy and fairly quick. Borrowers to get one of these loans must certify. That means you just have to state it. You don't have to prove it. You just have to state it. Although I will say if you're lying, you can be convicted of perjury and all sorts of nasty stuff can happen to you. But you don't have to get the paperwork put together before you apply for one of these loans. You have to state that the current economic situation has made the loan necessary. That means you have been negatively impacted by the current situation, which is basically everybody. You will state that you will use the funds correctly, which is for the things we just talked about, mortgages and loans, and most importantly, payroll. And you can't apply for multiple PPP loans on the same business. You got multiple businesses, you can apply for each one of them, but each business only gets one. And that's it. There are no fees. There's no unable to obtain credit rule. Typically for small business loans, you have to prove you can't get credit somewhere else before you can get a small business loan. Not in this case. If you're a small business, you're almost certainly qualified. You also don't have to make any personal guarantee or offer any collateral for these loans. They are just there. Next slide. The reason for kind of lack of oversight is that the government does not expect you to pay any of this back. The government expects you to spend it and then have it be forgiven. The PPP loan forgiveness program will cover all of your loans spent during the first 8 weeks after you receive it. Again, 2 months. The government doesn't want you taking this money and spending it over the next year. They want that money being pumped into the economy specifically to hire back employees or to keep people on your payroll for the next 2 months. So if you spend all of this loan in the next 2 months, it will be forgiven, except for loan money you use to pay interest on outstanding loans, not your mortgage. Mortgage is covered, but any other outstanding loan is not forgivable. In addition, and this is interesting, SBA rules say that 75% of your loan has to be spent on payroll to be forgiven. Now, you can get the loan and spend it on other things other approved things if you want, but then you have to pay the money back. There isn't actually language in the law that says that. There is language that gives the Small Business Administration authority to do this, but that's something the SBA came up with on their own. So if you spend 75% of the loan on payroll, spend it all within 8 weeks, and spend the other 25% on leases and rent and whatever, it will be forgiven. And that's that. Unless the amount forgiven will be reduced relative to any reductions in headcount from February until you apply for forgiveness. If your headcount has gone down 10%, 10% of the loan cannot be forgiven. And reductions in payroll above 25%. So you can reduce payroll by 25% and still have the whole loan forgiven. But if you reduce it by 50%, the value of that 25% is not forgivable. So as long as you don't reduce payroll and don't reduce headcount, you should be able to get all of this forgiven. The forgiveness application process is remarkably simple, actually. To get the loan, you basically just have to sort of a couple things. To get forgiveness on the loan, you actually have to document what your employment levels were, how much you spent on payroll then and now. You have to document legitimate costs, so you have to provide mortgage statements and things like that to prove that, yes, this money was spent to do these things. And then you have to certify, just state that the loan was spent properly. Important to note, the forgiveness process is a little more complicated than the application process. It's still not very complicated, but it's a little more complicated than getting the loan in the first place. But you don't have to apply for forgiveness the same day you apply for the loan. What that means is you should apply for the loan. If you think you might want to use them, you should apply for them now, even if you don't have your paperwork pulled together, because you can apply for forgiveness down the line once you get the loan, shortly after you get the loan, and not worry about it. 2 very good websites, sba.gov, treasury.gov. More on them in a minute, but when we're done with the presentation, that's where you want to go to start this process. Next slide. Economic injury disaster loans. In order to qualify for the special program, your company has to have existed on January 30th of this year. So brand new companies don't get access to the benefits. What the CARES Act did is it took the existing loan program and broadened it and simplified it. Among other things, the application for an economic injury disaster loan is based solely on your credit score. So you don't have to submit paperwork. You don't have to do very much of anything. I assume the government will be able to get access to your credit score with simply your permission. And if your credit score says you are a viable economic thing, you should be able to get one of these loans. Next slide. The loans are up to $2 million, but this is the key. When you apply for an EIDL loan, you are qualified for a $10,000 advance on the loan value. That $10,000 advance should be available within 3 days of getting your it should be in your account in 3 days after putting in your application. That's what the law says. It's got to be 3 days. It is subject only to self-certification. As long as you don't lie, you do not have to pay that $10,000 back. Even if your application is eventually turned down, you still get the $10,000. The only catch is, again, there's restrictions on how you use the loan. The restrictions on that $10,000, it's not a loan, it's a grant, are actually much more lax than the PPP loans. You can use it on sick leave, mortgage, and payroll, mortgage payments, the principal and the interest. And you can use it for disruptions caused by the pandemic. For example, the law explicitly says you can use the $10,000, and actually the EIDL loan in general, to respond to disruptions in your supply chain. If you suddenly can't get supplies and you have to buy from someplace else, incurring additional costs, higher prices, shipping costs, whatever, those additional costs can be covered by these loans. Next slide, please. The SBA loan subsidy program, again, this is existing SBA loans. This isn't a new program. It's just a new little wrinkle on existing programs. It is good for any existing SBA loan made by the SBA or guaranteed by the SBA, not counting the brand new PPP loans or the new modified EIDL loans. Those have other protections built into the programs, so you don't need these on top of that. And here's the deal. You have an SBA loan, you don't make a payment for the next 6 months on it. It's actually better than that. Not only do you not make payments for the next 6 months, but the government is going to make the payments for you. What that means is, starting technically, and we'll talk about it in a second, technically, starting at the next time your loan payment is due, the government will make the principal and interest payment for you, and that's it. There's no paying back, there's no loan. Small business loans will not be paid for the next 6 months, which is kind of exciting. Next slide. This next part is awfully exciting too, except that it frightens me slightly. How do you apply for one of these? And the answer is you don't. It is supposed to simply happen. Small Business Administration has actually, frankly, a fantastic website up that not only provides information, but applies ways to apply electronically. I just want to dwell on that for a second. The SBA has produced an entire new set of websites handling all of these programs and helping walk people through the process in essentially a week and a half, which is very impressive. There's a section in there on the loan subsidy process, the SBA-owned loan subsidy process. And this is the entirety of that section. As part of SBA's debt relief efforts, the SBA will automatically pay the principal, interest, and fees of current SA, those are small business loans, 7A loans for a period of 6 months. We'll also pay the interest on new SBA loans given through the normal application process. Again, not PPP, not EIDL loans, but any normal SBA loans that are going to be approved between now and September 27th, which is 6 months after the law was passed. The first 6 months will be paid for by the government. Now, you'll notice there is no button in there to apply. What is supposed to happen is the government knows about all SBA-backed loans, even if they're issued through a private insurer, a private banker. Therefore, the government is supposed to take those loans and start automatically making the payment. However, While I'm sure we can trust the SBA will do that, I would strongly urge folks to verify that before you stop making payments. It is not clear exactly when these payments are going to start. It will be soon. The SBA and the rest of the government is being extremely aggressive at rolling these programs out. But I would check with the SBA to make sure the payments are being made. Check with your bank to make sure your payments are being made before you assume that they will simply happen. This is not something you have to do today necessarily, but at some point before your next payment is due, or I should say, some point before you stop making payments for 6 months, double check and make sure it's happening. But other than that, it just is. And if you have an SBA loan, you don't have to make a payment for 6 months. Better yet, they'll make the payment for you. Next slide. Okay, so I had originally had a couple actually slides with online resources with links to all the various government resources. Here's the thing. The government has done a fantastic job of getting stuff online, but they didn't take the time to make spiffy little web addresses for all the different pieces. And so all the links were these enormous, god-awful addresses with numbers and characters and slashes and things. So I took them all out because nobody could copy them anyway. Go to sba.gov, go to treasury.gov. Both of them have very user-friendly resources, very user-friendly applications to walk you through the process and help you get your loan quickly. I was actually playing with the SBA page this morning, which went live at 8:30 this morning Eastern. And I actually started applying for a loan just to see how it would work. And I was 90% of the way done in about 5 minutes. I obviously didn't complete it because I don't have a small business, but the system is up and running, and it seemed, as of a couple hours ago, was running very well. Here's the catch. In the CARES Act, Congress put aside very large pots of money to pay for all of these programs, but they did not put forward an infinite amount of money. For example, there's $349 billion put aside for the PPP program. That's a lot of money. Even by Washington standards, that's a lot of money. However, if every small business in the country applies for one of those loans, each company will get about $11,000. These programs are very powerful, very useful, and very available, but they are limited. So for any of you who work for, own, or are a small business who think they might need one of these loans, I strongly urge you to apply today, over the weekend at the latest, because once the money is gone, that's it. Congress may top it up later on, depending on how the pandemic moves forward, but we can't guarantee that at this point. And once the money's gone, it's gone. My understanding is, I've talked to some small business friends of mine since this morning. Applications are being accepted, and in fact, in some cases have already been approved. One friend of mine who owns a small business in my hometown had their PPP loan approved in 2 hours, which is pretty good. The trick is, once they run out of money, that's going to be it. So you need to move fairly fast. And with that, if you have questions, please feel free to post them, and they should start popping up on the screen while we wait. My name is Russ Harrison. I'm the Director of Government Relations for IEEE-USA. We're going to do these updates every week for now, until life gets back to normal. So we'll be doing another one on next Friday at 1 o'clock. We're going to be looking at the rules in the CARES Act for charitable contributions, and then looking at some of the other programs that are affecting IEEE members, particularly looking at new research regulations and rules for folks that receive federal research grants. And I'm not seeing any questions, which is fine. My email address is on the screen. It's r.t.harrison@ieee.org. My phone number is 202-530-8326. If you think of anything in the next couple of days, or you end up having trouble understanding certain things, feel free to give me a call. And I'm happy to be as helpful as I can. Wish you all the best of luck. Thank you, Skylar, my good friend out in New Mexico. Wish you all the best of luck. Thank you for joining us.